Just stay on it. Still, we'll come back to you in just a few minutes because for now we're going to put the spotlight on the biggest story that the market is tracking, and that is all the developments surrounding the Adani Group that have taken place in the last 24 hours. We have our expert panel with us now. Market expert Prakash Diwan joins in. We have Sandeep Parekh, managing partner at Finsec Law Advisors, as well as Shriram Subramanian, founder and MD at InGovern. Gentlemen, good morning and thank you for joining in. Sandeep, I want to start with you to just understand the nuances around the Supreme Court order that came out yesterday. Now, the market is loving it because it seems to be putting a timeline to things. SEBI has been given 2 months' time to see if there's any violation of securities law and then submit the report to this panel. What happens then on? I mean, the panel can take its own time. I'm not sure. What's the remit of the panel? Can it overturn some of SEBI's recommendations? Basically, from a market standpoint, do you see this wrapping up in 2 months or could it drag on?
Hi. So I think it could drag on because, 2 months is the time given to SEBI to investigate, and then the panel would review it, I presume, and then at some point give it in a sealed envelope to the Supreme Court, or I don't know if they make an open report. And then Supreme Court will kind of probably give a copy to the other side, which would be the government, SEBI, etc., and then ask them to kind of file their affidavit. So it's kind of will go into a process, which means it's still a couple of months away, really. But I think in terms of certainty, yes, I think this will bring some certainty to the entire, the factual matrix, which seems to be quite blurry at this point of time.
Okay. The other development, obviously, is this equity raise that the promoters have managed to do. And Prakash, let me get your sense on this. So we know the numbers, 15,400 and 50-odd crores have come in. Does it inspire confidence, the entity GQG? And how do you see the market taking a stance on the Adani Group companies from here on?
Good morning, Surbi. So I think it's absolutely a coup of sorts to get somebody like GQG to buy into, the Adani portfolio of companies at this point in time, where the world is still looking at it with doubt and still a little bit of lack of confidence. So if you see the kind of portfolio buildup that this fund already has in India, it's almost like the Nifty companies. I mean, this probably. This is an opportunistic call that they've made to buy into companies where they see value in the long term, and primarily predicated by the fact that these businesses have very strong assets to rely on in terms of this thing. So what it does for the market, which is more important, is it tells you that the promoters of this group have actually started making sure that even if they were to sell the family silver, but save the larger portfolio of companies and the business doesn't get impacted. Because remember, all the business projections that we've been talking about, the salience within each of these companies is dependent on how much they can grow, at what pace they can grow. So while that pace might come down, the certainty goes up. So there's a lot of anxiety that goes out of the market. This is definitely going to get a lot of naysayers to kind of look at things at least more tepidly, not so negatively. But that doesn't mean that everybody turns positive. People be still skeptical and want to sell at any rise. So because they would probably believe that it takes much more than just one fund buying about $2 billion into the group. But there is definitely a huge relief that the banks will see, that the overall market will start sensing from this acquisition, this buying into the portfolio.
Hi, good morning, gentlemen. Prakash, just want to make a quick point. Everyone was worried that MSCI selling will come about. Now it'll be interesting to see how that plays out, because the promoter entity has sold, so the free float goes up. So will there be realignment of those portfolios? We'll have to wait for a verdict coming in from MSCI. So that's going to be, an interesting point as well to track. But Prakash, which stocks would you focus on today? Now, some of those stocks, they saw the large trade yesterday. One school of thought is, maybe now the promoter, I mean, they have 15,000 crores odd that they still have to put in the warrant conversion in Ambuja Cements. Will that look far better right now? Or will you look at some of those banking names? Because exposure or not, they got hit the hardest once this entire Adani fiasco broke out. So which stocks will be on your buy list post this?
So, Nigel, it's quite tricky because the banking stocks will respond to this with a little bit of a short-term sentimental change because it was never so fundamentally debilitating for them when things went bad, right? I mean, beyond that 1% exposure, or technically it could be 1%, but in terms of impact, it could have been slightly more. So there will be this this bump up, and traders could take advantage of that pop. But where the value starts getting very visibly centered in the Adani group of companies is things like Ambuja Cement. You have a business that has been so strong in a cycle which is poised so well, and scale which is so formidable. So I don't see, and there's never been any change in the stock price in the last 1 year, which is as dramatic as an Adani Green or something. So let me make it simpler. What I would not look at buying into is an Adani Green or an Adani Power or at this point in time. But the ports business, which has clocked some amazing numbers, is something which will keep on coming up with encouraging numbers, which will eclipse all these issues that you had on the pricing. So, you have these pockets where you could do, but don't be in a hurry. Let the market also give its verdict, and you may get an opportunity to buy into these. Once this temporary exuberance is also kind of digested of sorts.
By the way, guys, I'll put this out in detail, but Rajiv Jain has given an interview to the Australian Financial Review, a newspaper. The fund is based out of there. It's listed
in Australia, yeah.
Australia. And it's pretty interesting comments. I mean, on Hindenburg, and this is a quote, they say that they have their view, we have our view, and we happen to disagree. But that's what makes a market. I mean, I read through the piece, the interview which is given, and clearly they don't see any, the first takeaway is they don't see any corporate governance issues at all, right? On corporate governance, maybe we should have the graphics ready, but I just want to read this out. They say, on corporate governance, they say, a lot of governments come and gone in this period. Frauds typically don't last 30 years. They last 3 months, 3 years, maybe, but not 30 years. And they talk about the value creation over the decades, etc. So it's an interesting piece backing the investment, which they've made over 15,000 crores.
Yeah, so that's a very interesting one. And yeah, we should get some of those quotes up on the screen in due course. Let me take that forward with you, Mr. Subramanian. And that's the real thing. Yes, this group, GQG, it has come in to back the Adanis, but they've done it at a price. They've done it at a price which ranges between 40% to 80% of the peak that these stocks saw. So let's not lose that reality as well. I mean, as they say in the market, everything is good at a price. But from shareholders' perspective, especially a lot of the retail shareholders that might still be owning these stocks, if at all, what should they watch out for as these parallel developments take shape? There is the SEBI probe, which we discussed with Sandeep. And then there's this big marquee investor coming in saying that, they believe in the story. How should shareholders navigate this now?
Good morning. Firstly, SEBI's probe or the Supreme Court Committee's probe should not go into price action. That is, they should not look at valuations. They should not look at price actions. Because as the comment said, everybody has a view on the market. GQG could have a positive view, Hindenburg had a negative view. And though the price has tanked, both are opportunists in that sense. So retail investors obviously should only be worried about the level of disclosures. The regulator should be worried about whether there was round tripping, and if there was round tripping, what were the issues of round tripping, and whether that is a market-wide phenomenon, not just restricted to Adani Group of stocks, but whether it was a market-wide phenomenon. So to that extent, retail investors should, right now, of course, be specific to the Adani Group of stocks, stay away. Diwanji also gave some insights on that.
Okay, so caution is what this panel is advising. And take your point, I mean, a lot of these allegations on related party transactions, X of price, it has nothing to do with how the shares are moving. But some of these, of course, issues will be taken up by SEBI. Thank you very much, gentlemen, for joining in with your quick take on this important story that the market will continue to look at going forward. We need to get into a very quick break on that note. On the other side, we have Mitesh Thakur joining in along with Shrikant Chauhan of Kotak Securities. We'll get some technical ideas going in the market today.